Oil prices fell around 1% on worries of a possible US recession. That's as US retail sales continued their fall in December, dropping by 1.1% as inflation remained high. It is the largest monthly decline since December 2021, with every category except for building materials, groceries and sporting goods seeing sales drops. Brent crude is now trading at $83 a barrel, and WTI, that's the US benchmark, stands at $78 a barrel. Worries about a potential US slowdown are outweighing optimism that China's lifting of COVID-19 restrictions will fuel significant global demand for crude. For more on this now, let's go to Stephen Innes in Bangkok. He is a managing partner at SPI Asset Management. Stephen, many thanks for joining us. So the IMF, no longer than a week ago, really said that the US may be the only country able to avoid recessions, and now there are fresh recession fears on the back of this data that we've seen in the retail sales. Why is this happening now?
Well, lagged effects from the Fed policy, perhaps, that are starting to finally weigh down the resilience in the U.S. consumer. However, if we look at what's going on in the overlying economy, things are still okay in the sense that we have that decelerating inflation, which is allowing the Fed to step down the pace of rate or the size of rate hikes, which is quite favorable, and that should support growth to an extent. However, we have so much recession talk in the market and so much priced in to the market. Anytime we see a weak data point, I think going forward, the market is going to interpret that quite negatively. And I think that's the culmination of what we saw overnight. However, things are pretty based down today right now. There's a lot of favorable stuff going on in the market. As you alluded to, the China reopening is still providing that underbelly of support for global markets. So I think it's still a wait and see to see how the U.S. economy comes out of this mess.
And Stephen, will stronger Chinese demand mean oil prices will go up this year? Some analysts are even talking about potentially $110, $130 a barrel. Would the US be ready to deal with such a high price level?
Well, yeah, well, no, that's going to get under the Fed's ire here. That'd be just really negative. But I think the potential is there. Right now, oil markets are getting held back because there's a fair bit of oversupply in the markets right now, and that's part of the U.S. putting reserves into the market. And also, the market was thinking that the Russian embargo would curtail some production. That really hasn't happened. I think, however, once we get more into this China reopening and the consumption engine start to fire a little bit higher, especially from the consumer side of things, I think oil prices will catch a flyer. We could possibly hit $100 per barrel on the international benchmark Brent crude.